Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as we all know, today we'll be looking at the New York session open. And of course, today being a public holiday in the US, then we will be expecting out of thin trading. So by thin trading, it means that a majority of the participants from the US will be absent from the markets. US equity markets will be closed, as well as commodities markets. So a majority of the prevailing trends may be expected to continue. And of course, technical analysis will basically reign supreme at the absence of any news. So whenever you have such a huge holiday happening in the markets, investors will tend to stay away, and you'll not get very strong trends happening. So in most cases, you'll find ranging markets, or basically markets moving sideways. So today, as a side thing, I would like to introduce a thing that I haven't said in a while. So I've been looking at quite a number of social media posts, including Telegram. And what I've been seeing is some traders advocating to new and younger traders that they can trade without using a stop loss. So that is basically bad advice. And it's basically very terrible because it can easily blow up your account. So your account running down to zero can be very easy, especially when you don't practice proper risk management. So let me get to this in a better way. So the reality of the financial markets that we participate in is very tough. It's a very tough environment, just the same way you'd think of navigating in an ocean with a boat. There are sharks everywhere, and any kind of thing would happen in the ocean. So first things first, we all know that markets tend to be volatile, be it forex markets. So if you're trading forex, if you're trading indices, commodities, if you're a gold trader, then you know that volatility reigns supreme. So in this case, we understand that when the markets are moving, if the normal movement is a small number of pips, it's not guaranteed that the market will always move by the small number of pips. Sometimes the market will be highly volatile, and these kind of things sometimes is not very predictable, and those huge moves can happen at any given time. So for instance, this is a chart of gold. Normally, we don't see much happening in gold, but there are days like this when you'll see some huge volatility happening in the markets. And if you're caught on the wrong side, then it can literally wipe out your account. So an example, the difference in this swing between this high and this low, and this is within 24 hours, is about 3,509 points, or around 350 pips. So what this means is that if you're caught on the wrong side of such a market, and you are trapped in that swing for an entire day, then it would basically mean, say you're trading one full lot, you would be basically down over $3,500. So if your account is smaller than that, then you basically be kicked out with a margin call. So on the other hand, let's say you're trading 0.1 lot size on gold, and you're on the wrong side of this one, then you'd be down $350. So if your account is less than that, then it would probably wipe out your account. And of course, if you're trading the minimum, which is 0.01, then it would mean that it would be down $35. So if your account is $35 or below, then you would basically be wiped out within the price action for a day. So what this tells us is that since the volatility in the markets is not predictable, then you have to be prepared at all times that the prices can get really volatile, and you have to accept the fact that you cannot be right at all times. So there's no single trader in the world that is always right at all times. Sometimes we get caught on the wrong side of the market, and not just us, even the big time investors such as Warren Buffett, sometimes they make the wrong trades, and they are forced to exit the markets at a loss, but this doesn't ruin their entire portfolios. So the number one thing to accept in the markets is, one, the prices can move in any direction. They can move up, down, or even sideways at any given time. They can move up and down by any number of pips, and at any given time as a result of any form of news. So this means that markets are completely unpredictable, and what we do as traders is to try and play this probability game. So by there being a probability, it basically means there's a chance that you could be right, and also there's a chance that you could be wrong. So the important thing in risk management is that in that chance where you are right, you get to make a profit and grab that profit of the market. So when the market gives you money, don't leave it hanging in there, just take the money. And of course, if you're caught on the wrong side of the market and your trading idea is invalidated, you don't have to stick around. You can take a small loss and then look to regain that money from another trade. But then it also works in a different way. So when you think of full margin traders go all out without setting a stop loss, they are probably an individual or set of individuals who have a consistent flow of income. So you might be in a business, let's say somewhere else, let's say you're selling something out there, or you have a business that is generating cash flows, or you're even a landlord. So if you go all out on your trades this month and your account is wiped, say on a bad trade, you'll still have another money next month to get back in the markets. So in that case, if you decide to go full margin and you are completely aware of the risks and the opportunities presented, then that's all on you. But if you are a normal trader like myself and other traders who really struggle to earn their money, then you have to be careful about the risks that you take in the markets. So that being said, the other key thing to notice is that if you are wrong or caught in the wrong side of the markets, the opportunity cost is even worse. So I've been there, I've been trapped in a trade for a couple of weeks, a couple of days. So you are every day worrying about your current trade that is running in the negative. And in between that period, other opportunities may appear in the market. And since that you're already trapped, maybe you're even over-averaged in the position, then you find that you don't have the time or the money to take advantage of a new opportunity that appears in the market. So it's very important that you stay liquid, make sure that you always have sufficient liquidity in your account to take on a new opportunity. And the best way to do this is to avoid getting trapped in negative or losing positions where you are basically trading without a stop loss. So that's why it's very important to always have a stop loss, and it basically helps you predetermine the amount at risk in any given time. And this gives you a peace of mind. So if you've been trading and you're attending this session, I would like to ask a very quick question. Have you ever entered a position and then since it was too huge or bigger than your risk appetite, you didn't find sleep, or you would wake up somewhere in the middle of the night, 2 a.m., 3 a.m., just to check on the current level of your position before going back to sleep, and to make you completely restless? If you have been there, I would like to see your response on the live comment section as we continue with today's presentation. So hello, Philip, and hello, Kevin. Welcome to the session. I really appreciate you guys joining the session. So if you have any questions, comments, feel free to type them in the live comment section, and this will be very much appreciated. So that being said, about the current market situation, as I mentioned, today being a public holiday in the US, where the Americans are celebrating their Independence Day, we are not expecting much in the markets. So of course, in the economic calendar, majority of the stuff that we expected for the day has already happened. And this is majorly the interest rate decision in Australia, which happened at 7:30 a.m. Sorry for that. So the Reserve Bank of Australia basically decided to keep holding rates steady at 4.1%. But immediately after announcing their interest rate vote, they also released the Reserve Bank of Australia rate statement. So it's something that we covered early in the morning when we were doing the market snapshot series. So this is basically the statement. So I'll be sharing a link if you, in case you want to go through it by yourself. It will be available on the live comment section. So I've just shared that. So in the statement, it was very clear that the Reserve Bank of Australia decided to hold interest rates level, having hiked interest rates by over 4% since May last year. So the Reserve Bank of Australia is arguing that these interest rate hikes take time to have their full effect on the US economy. So far, they believe that the rate hikes have not had the full effect, and inflation has already peaked. So they expect inflation to continue dropping towards the 2 to 3% target. So with this in mind, if inflation is dropping towards the 2 to 3% target, then they are watching the key indicators in the economy. And one of the key worrying indicators seems to be the job market, which is currently very tight. The current demand for labor, that is, employers are currently advertising more and more jobs, and there is not enough people to take on those jobs in Australia. So as a result, unemployment level has really dropped to an almost 50-year low. So this is quite a big record and achievement for the Reserve Bank of Australia, having full employment in the economy. But then on the other side, there's what we call the wage growth. So since companies are basically fighting against themselves, or basically competing to recruit top talent, in order to retain their current talent and recruit even more talent, they keep on increasing wages. And as a result of this, you realize that people in Australia have more money in their pockets. And when there's more money in people's pockets, they tend to spend that money on more goods and services, create or increase aggregate demand. And as a result of that, you tend to see prices continuing to rise. So the fact that there's full employment in Australia basically means that there's more inflationary pressure, which is what the Central Bank of Australia is trying to address. So in this case, the wage growth spiral is becoming a challenge, and the central bank governor, Philip Lowe, basically promised the economy that they are not going to do anything they have to do in order to make sure that inflation expectations are anchored. And of course, inflation drops towards the 2 to 3% target. So in the last sentence of the release, the board remains resolute in its determination to return inflation to target and will do whatever is necessary to achieve that. So this was majorly taken as a promise or as a forward guidance, basically indicating that the Reserve Bank of Australia is looking to hike interest rates on its next meeting. So upon processing this information, what we saw in the markets happening early this morning, if you check AUD-USD currency pair, you notice that immediately the news were announced, there was a big spike downwards, and the big spike meant the Australian dollar was losing to the dollar. But then investors started pricing in the potential that the Reserve Bank of Australia will continue hiking interest rates. And now we saw the reversal where the Australian dollar started gaining against the US dollar. And since then, it has been a continuous trend upwards. So in this case, we expect the Australian dollar to continue strengthening against the US dollar. And of course, from the technical price pattern, we have seen the market break this particular trend line. So in this case, last week, we were expecting a bounce. So this did not happen. On Friday, there was a clean break, a retest on Monday, and today, another retest before the market continued higher. And now we are seeing a market that is intentionally looking to form higher highs as well as higher lows. So the trend may be expected to get positive and continue that way. So also, I mentioned something else that if you're looking to trade a strong currency, you want to pair that with a weak currency. And so far, the number one economy that has been showing weak monetary policy that is not looking to strengthen their currency has been Japan. So in this case, we try and pair the Australian dollar with the Japanese yen, and as a result, this is what we have. So it's a market that was trading within a falling wedge, made a break on Friday, and continued pushing higher on Monday. And today, it seems like the market is attempting to break even higher. So you can see the number of candlesticks that are currently testing this area. So far, they have all failed. So we don't have a break yet, but following the news that we had early in the morning, there's a good chance we'll be seeing some break happening here. So we have like almost 8 candlesticks that have touched this price level of 96.611. And if there's a break, we'll be expecting the leg to extend higher. And this would mean some further upward momentum for the Australian dollar traded against the Japanese yen. So normally, whenever you have a pattern like this and the market breaks outside, we expect the market to trend all the way up towards the base of the pattern or the top of the pattern here, which is a price level of 97.651. So in this case, anytime there is such a break, you expect the market to rally all the way up to that level. So it may take time, but if this happens, then it's quite an excellent trading opportunity. So that's it for the Australian news that happened early in the morning. And now we try and take a keen focus on what to expect for tomorrow. So going forward, since today is a public holiday, we will not be having much happening in the New York session. Then let's look at tomorrow. So back to the economic calendar. So tomorrow being Wednesday, we'll be looking at quite a number of news announcements. So we'll be starting with the ANZ commodity prices, which is a measure of inflation. Then we look at retail sales in Australia. Before we look at Kaizen services PMI for China, which is basically a measure of the forward prices of services in China. Then French industrial production will be a key leading indicator for industrial production in the Eurozone. Spanish services PMI, Italian, French final services PMI, German, and of course the total data for the entire Eurozone at 11 a.m. Then we'll be looking at the final services for the UK at 11:30 a.m. And at midday, we look at the producer price index for the Eurozone. So most important data points will be coming from one, the OPEC meetings, which will be running all day. OPEC is basically the oil producing and exporting countries in the world, which are basically led by Saudi Arabia. So they'll be having a meeting tomorrow. And of course, they will be looking to respond to the current global economic conditions that have shown there's a slowing economic activity, especially from the US, China. We have seen it happen in the Eurozone, the UK, Switzerland, and so on. So their response will be very important for oil market traders. Yes, the meetings will not be live, but the participants tend to share information on social media about the progress of the meetings. So besides these, we'll also be looking at factory orders in the US, IBD economic optimism survey in the US, Ward's total vehicle sales. This will be happening all day. And of course, the most important data point will be the Federal Open Market Committee meeting minutes, which will be released at 9 p.m. So this will share the final details on the data that the Fed was looking at when they made their decision to hold interest rates at 5.25% in the previous meeting. So we'll get the final details of the data that the Fed was looking at, the economic conditions in the US, and why they voted the way they voted. So two data points to be focused on: OPEC meetings and of course the FOMC meeting minutes. But then also it will be very important to understand the services PMI for both the Eurozone as well as the UK. So that being said, now we know what to expect in the economic calendar. And then we now move on to some further technical analysis before we get to the end of the session. So for gold traders, I know it has been quite a huge question on where is gold is headed. So clearly, you are on this bearish channel, and this is the path that the prices of gold are taking over the last 5 weeks. However, we had a break 2 weeks ago towards the lower side and a retest, and the market continues moving downward. So the break was right here, the market retests and then continues moving downward. Before we had a very nice bounce at 1892, and since then the market has been pumping upwards. So from 1892, price jumps all the way up to around 1909, gets back to a key support level of 1900, then rallies, breaks this level, goes all the way up to 1919 before going back to 1909. Forms a similar pattern, rallies all the way up to 1929, goes back to 1919, and now today there has been quite an excellent rally since morning, which went all the way to 1929 and now seems to be pulling back downwards. So in this case, if the market remains sideways, since there's no active participation from the Americans, then we could be seeing the price of gold dropping back to 1919. However, if the market persists and breaks this level, then the next level that we'll be observing will be all the way up at 1938, which was a previous resistance level at the top of this pattern, the triangle here. And if we get to this, then we'll be expecting similar price action to continue, where we are seeing a sequence of higher highs as well as higher lows. So from here, if you're using a smaller time frame, you can observe that there is some form of pattern that is emerging in this chart. And the pattern is following this path here. So far, the market could pull back, retest this particular trend line before bouncing higher. And of course, if it doesn't happen, then the next leg above this area would be along this trend line on the 15 minutes chart. So this is what we are seeing here. So if I was to zoom out and then extrapolate my line, then you can see the possibilities here. So a potential leg extending way above the 1935. And if I was to extend even better, it would basically coincide with the 1938 price level. So we could be seeing this particular price action move from this area and get all the way up in continuation of this trend towards the 1938 price level. So that's my analysis and expectation for gold going forward. So for US Tech 100, it's sideways movement since yesterday, since we don't have a lot of participation in the equities markets. So in this case, I don't think there's any opportunities until the market opens up tomorrow after the holiday. So same case happens to the Dow Jones, the Nasdaq, and SP 500. And of course, when you look at the US oil price action, there was a big spike yesterday before Russia announced that it will be cutting its oil output by 500,000 barrels per day. So after this, the market met some very strong resistance that has been holding for quite a period of time. And after getting to this resistance, you can see the market kept going down for the rest of the session. But then today, early in the morning, we had a very strong momentum. But from what we are seeing on the 1 hour chart, if this candlestick was to cross here at the top of the hour, then it would confirm a very common reversal pattern that we refer to as an evening star. So this would mean that bears are entering this market, and now we are ready to ride the price back downwards. So don't expect a very strong directional movement in any charts today. So in this case, a pullback would be in order. So it's something to observe, especially towards the top of the hour. So that's it for today. Don't have much. And of course, the most important chart pattern for today will be the Eurostoxx, which is a stock market index representing the top 50 companies in the Eurozone. So this particular chart has shown some very good insights here, where the market has been attempting to break the 4,412 euros per share. But then it was unable to break here, and this was in the month of April, came back, retested here in the month of May. Then in the month of June, came back and retested this area here. It was unable to break, and now we are getting yet another retest. So this seems like the most convincing trade of all setups today, where the market is consistently attempting to break this level, but failing each time. So in this case, from the 1 hour chart, what we are seeing is the market trading sideways yesterday, clearly unable to break that level. Today, a retest of the same level, which was very clear. You can see the two candlesticks that go up and retest. So these are our two candlesticks here, which is basically a reversal pattern. Then from here, you can see the market is attempting to go downwards, but we don't have much fuel in the markets since there's a very lean trading today. So there is a good chance we'll be seeing some further downside happening towards the end of the day. And of course, tomorrow, once we resume full activity from the holiday that we had today. So there is a good chance we'll be seeing some further downside happening on the Euro 50 chart. So just checking to see if there's any comments or questions before we end the session. So not once, but once risk management is intact, the fear is no more. Thank you, Vandy. I appreciate the comment. A very good comment from Philip. I never slept. Niliweka maji kwa basin and kahawa na jaba. I ended closing with a $2 profit. Very intense. I prefer trading early mornings at 4 p.m. to 10 p.m. Rest in the analysis, I'm on Netflix. Yes, anytime you go for a bigger bite than you can handle, anytime you go for a bigger trade that you can handle, it is going to definitely stress you. So you will be traveling and you'll basically be completely distracted, trying to check on how the market is performing. It will increase your stress levels, which basically increases your emotional reaction. and basically increases your emotional action in the markets, which is in most cases a bad decision. So to reduce this, always use a stop loss and trade within your risk appetite. So if it's something that you not otherwise risk, don't go for it. If you normally risk, let's say $50 a day, don't risk anything higher just because there is news. So always practice proper risk management, protect your capital at all costs, and bit by bit, once your strategy starts working, you will find yourself making consistent profits. Also, a good comment from Kevin. Yes, character development, night shift. Yes, I understand that. I've been through the same too. It's one of the worst experiences you can ever subject yourself to. Do you think the dollar will continue to be bullish for a while? Yes, I'll be expecting the dollar to be bullish, but not today. Of course, today being a public holiday, I expect some sideways momentum. And I think that has been the case since the opening of the week yesterday. So market jumping up and then down and then closing here. Today, up, down, up, down. I don't expect any big momentum to arise from this. So for now, I'll remain in this case with these buyers that the dollar is just trading sideways. And if we estimate the overall price action here, I would say price is just moving this way. So a very slight bearish momentum, but overall price is just moving sideways for the last 2 days. So all this means is we don't have any clear directional movement. So when the dollar is really weak like this, you're able to identify opportunities in other currencies. When it's really strong like this, you're able to identify opportunities. But when it's moving like this, you don't get to see many opportunities in the markets. So that's it for the day. Thank you very much, guys. Thank you for your time. And I hope to see you guys on the next session. So remember, the next session is tomorrow at 11 a.m. during the Market Snapshot series, which will be hosted by Norbert Kiza from Kampala. And hopefully we'll get to grab some key lessons and updates that will help us trade through the day. Thank you, Elite SS. I'm assuming that's not your name. Love your analysis every time you do it. Thank you. I appreciate this.